Today we are going to talk about a very interesting company. So the things to note about this company is that it is in a growing sector. It is going to be benefited from China Plus One. It has a strong parentage. It has announced a significant capacity expansion, and most important thing is that it is available at a very attractive valuation. So today we are going to talk about Rajapalyam Mills. Now this company is engaged in the manufacturing of yarns and fabrics, and it has a strong parentage support from Ramco Group. So if we talk about the textile industry, it is one of the oldest industry in India, which is still thriving because of its robust demand. If you look at it, India favors the growth of textile industry with the availability of cheapest yet highly skilled laborers, along with lowest cost of electricity among its chief competitors, and all this is getting favored by high textile integration and good port connectivity. This gives India a competitive advantage. If we talk about Rajapalyam Mills, company is continuously improving its top line as their products are very well received from the market. So their major exporting country is Japan, which provides duty-free access to India. And if India is able to sign a similar FTA with Europe, Rajapalyam Mills is surely going to reap its benefits. Now this is also well supported by the numbers, where company has registered a growth of 74% in export of cotton yarns in the financial year 22 to 23, and export of fabrics has increased by 91% since last year. Company has a continuous thrust on modernization, where it is continuously replacing the old machinery with the new and automatic ones. They are not only modernizing, but they are also forward integrating. Their focus is now shifting to higher margin products like higher margin fabrics and high value customized yarn varieties such as mercerized yarn, melange yarn, core yarn and more, which is also helping to build a strong position for the company. So company has announced an expansion of its existing capacity by 110%, and this capacity expansion is actually backed by its strong order book. Order inquiries from existing customers have already booked the 60% of the expanded capacity of the fabric division. This also gives us good revenue visibility for the company, and this also holds true for the higher margin products. The order flow for a special value added fabric, say jacquard fabric, has been so encouraging that their jacquard loom capacity, including the newly commissioned 32 looms, is fully booked for the calendar year 2023. Till now you can see the bright prospects of Rajapalyam Mills with expanding capacities, which is backed by the order book and favorable policies towards the company. But this is not the best part about Rajapalyam Mills. The best part is the valuation. So the market cap of this company is around 700 crores and the enterprise value is around 1800 crores. So the company has some investments in its sister concerns, which are listed entities themselves. Their valuation as on 31st March 2023 was around 2600 crores. And the current valuations of these investments come around to around 3200 crores. This means that you can buy investments worth rupees 3200 crores along with the business of Rajapalyam Mills, along with all the machinery and their goodwill, at an enterprise value of just 1800 crores. Company has actually sold some of its investments for undertaking the expansion. So these investments actually ensure that there's very little downside risk of investing into Rajapalyam Mills, and they also ensure that the company has a cushion whenever they need some extra funds. So these were the reasons why we like the company. Don't forget to tell us what do you think about the company in the comments below. Stock market investments are subject to market risk. Please read offer documents carefully before investing.